The US dollar hit a two-month high yesterday, driven by comments from one of the Fed Reserve's top officials, Christopher Waller. He called for greater caution regarding upcoming interest rate cuts, signaling a potential slowdown in the Fed's dovish pivot. Waller's caution stance was bolstered by solid recent economic data, with more comments expected today from the several other Fed officials. During today's US trading session, we anticipate increased volatility in the forex market. Now let's take a close look at how the economic report scheduled for October 16th and 17th could affect the major currency pairs. You are watching Traders Calendar. Given that the currency's yield is directly tied to the strength of the economy, the reverse process becoming evident. Currencies of the countries with weak economic fundamentals are less attractive for investors. Combine that with a low benchmark policy rate, which further devaluates the currency, and you get the full picture for the Japanese yen. Its current standing remains very weak. The anticipated decline in the industrial orders, which are expected to fall by more than half, could only add to this weakness. While the Bank of Japan is waiting for the right moment to tighten its monetary policy further, most other major central banks are cutting their interest rates. The Bank of England was one of the first to act, lowering its key interest rate by 25 basis points on October 1st. If tomorrow's inflation figures confirm a drop to 1.9%, expectations for another cut at the November 7th meeting will rise. Against this background, the pound sterling is expected to lose value as early as tomorrow. Traders may also take notice of tomorrow's producer price data from Russia, with expectations of a decrease to around 9.5%. Low inflation tended to exert downward pressure on the local currency, meaning that the ruble is likely to suffer losses. Inflation in the euro area is already at a relatively low level and is forecast to ease further to 1.8%. This report, set to release on Thursday, October 17, will serve as a key reference point for the European Central Bank's upcoming rate decision, dragging the euro further down. A few hours after the inflation report, the ECB is expected to announce its rate decision with a 25 basis point cut anticipated. The press conference with the ECB President Christine Lagarde will follow 30 minutes later, potentially sparking volatility in the currency market. In the light of these developments, the overall outlook for the euro remains negative. As for the US dollar, its price could face fluctuations on this day, while the weekly initial jobless claims report is expected to show a slight decline. Hurricanes Helen and Milton that recently hit the East Coast may cause disruptions. Despite potential confusion, any increase in unemployment claims could still support the dollar's strength. Further support for the greenback will come from data on the US retail sales. Monthly retail sales are expected to increase from 2.1 to 2.5%. Consumer spending is a crucial driver of economic growth. As we've mentioned before, a strong economy makes a country's currency more attractive to investors. However, the report on the US industrial production growth may put a damper on the dollar's bullish momentum, and the monthly figure is projected to fall by nearly 1%. If the forecast is confirmed, the dollar could weaken in response. Please note that all times in the video and in the GMT plus 3. The next Traders Calendar video review will be released on Thursday, October 17. We wish you profitable trading and see you soon.